Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided is general in nature and does not take into account your personal objectives, financial situation, or needs. Before acting on any information, you should consider whether it is appropriate for your circumstances and seek professional advice from a licensed financial advisor. While every effort has been made to ensure the accuracy of the information, it is not guaranteed. It is based on our understanding of regulations and laws as at the publication date. As these are subject to change, you should talk to a professional advisor for the most up-to-date information. Any examples or illustrations provided are for illustrative purposes only and are not a guarantee of future performance. We do not accept any liability for any loss or damage incurred by reliance on the information provided. Any opinions expressed are subject to change without notice. Past performance is not indicative of future results, and all investments carry risks. Neither the hosts, guests, nor any affiliated entities accept liability for any loss or damage arising from reliance on the information provided. By listening to this podcast and viewing this presentation, you acknowledge and agree to these terms.
Hey team, how are you? Good morning. Welcome to everyone who's jumping on. Good to see you guys. Another episode of Wealth Coffee Chats with myself, talking about all things financial planning. As always, jump on the comments and ask any questions. We'll cover off a few topics each week. And then as more questions come through, we'll tailor that to that. But before we jump into today's topic, I just want to quickly remind everyone about the Property Summit, mid-June, 13th to 15th of June in sunny Gold Coast. So mentioned it a few times and you guys would have heard about it over the last couple of episodes. Get into it. There'll be a link in the chat. Awesome event. Everything about property. If you love it, you need to be there. I was told that we are now coming down to the last couple of tickets. So we should be jumping on that as soon as possible. Otherwise, there is a capacity limit. So once we reach that, then I believe that's it. We're done and we're off and running. So what I'll do is I'll just play the video. You would have seen it. Some of you would have seen it. Some of you may not have. But check it out, and we'll come back in the tick.
All right, this is going to be fun. Who has played the property game before? Who has been in the game? who's never played the property game before? Oh, you're in for a treat. Who likes Monopoly? Did anyone like Monopoly when they were a kid? Well, this is Monopoly in real life in this room. Every hour or so, you guys are going to be up and you're going to be running around the room like maniacs trying to play the property game and win the property game.
Today, I wanted to share the lessons, the mistakes, and the wins.
I want everybody to put up their hands who knows their interest rates on all their loans right now.
If you haven't seen me around before, like 13 years in the industry, in property management specifically.
Who likes paying tax? If you need help finding somewhere to donate, I'm sure I can find somewhere else where it can go.
No, we've got an expression in that, let's go and make new mistakes in the world. Who wants to make new mistakes?
These are just strategic moves that can make such a big difference.
So obviously buy well, never sell. Definitely the majority of what everyone's looking to do is collect some A-grade assets, B-grade assets, whatever it might be.
I loved the idea of being a property investor and developing that identity.
Collectively, they have way more years experience in everything that you think you're trying to solve. Because they do it every single day.
Awesome. Like I said earlier, great event. Jump on it. If you can make it down there, I'm sure you will get value out of it. And I'm expecting it to be bigger and better than that video this year around. So super pumped to be there. And like I said, you know, if you love property, you will be amazed. And there'll be also other things on top of that too. So why not? All right, guys. So let's continue our discussion. So, by the way, thank you to everyone who reached out after the episode the week before last and asked further questions on cash. I didn't think there'll be so many questions about it, but no, super awesome to hear from you guys. So today, what we'll do is we'll jump on and continue our journey around, building out your investment portfolio, right? So. We already spoke about the key asset classes around cash, fixed interest, shares, property, and other assets, right? So each week we're going to dive into it a little bit more and see, what it is. Have a very sort of basic conversation about it. Again, love the general disclosure that we've been putting in at the start. So again, if you've got any questions, speak to a professional, and make sure that you make the right moves. So give me one tick. I'll just share my screen. So here we go. Awesome. All right. What is fixed interest? Right. So fixed interest is essentially an investment that pays you a fixed income over a fixed period of time. Right. So very sort of, I would say, the most misunderstood asset class across all of them. Right. So every time I speak to my clients about fixed income, I think that it's kind of, they go past it because they feel like it's the defensive side, which it is. And that's the defensive part of your portfolio, same as cash. But there's a lot more to it. So let's have a look at what these fixed income or fixed interest assets are. So the week before last, we spoke about cash. So now on fixed interest. So things that you will be super familiar with would be things like term deposits. So everybody knows them, super easy. Go down to your local bank, get a rate and lock it away for a period of time, typically something under 12 months. So what you might be discussing with your professionals might be something a little bit more advanced, and these things might be called bonds, right? So what are bonds? They are almost like a guarantee from an institution to pay you an income over a period of time. So very similar to term deposit, right? So everything sounds the same. However, there's different types of bonds. So today I'll just go through just a very service level about what they are. So you've got mainly two different types that you'd be familiar with. The ones that are government, so they're issued by the government. So it could be state, it could be it could be a nation, it could be a country. So there might be like a Victorian bond. Don't know if you want to get that, but if you did, that's potentially on offer. You've got the Aussie bonds, international bonds, things of that nature, and then you've got corporate bonds. So big corporations like BHP, Commonwealth Bank, just to name a few, they would have their own sort of bonds that they issue to investors to then reinvest that capital for their own purposes. So typically there's a bit of a scale in terms of risk factor. So term deposit, that it's ultimately risk-free. There is up to about 250,000 that the government will guarantee. So if you've got a slightly higher term deposit rate, then perhaps you won't be fully guaranteed anything above that amount. Government, so essentially you placing money with the government, and you hoping by the end of the term that they're still there and they pay you back. And corporate is, again, it's another layer. So if you think about a company, the company can be here today and tomorrow it might disappear for whatever reason. So there's another level there, which which are called hybrids. So these are very high level fixed interest investments that are typically reserved for a much more mature investor who's been doing investing for a little while and understands this space a little bit more. But again, coming back to fixed interest, it's a super important part. You would be surprised to know that fixed interest actually dictates a lot of the things that happen around the world with equities, with property. You'd be familiar with the interest rates on your loans, perhaps. So all of these things are kind of linked into this one asset class. Very understudied by a lot of investors, but it carries a lot of weight. So typically, what are we expecting from it? Nothing crazy in terms of returns. Relatively steady return is, I guess, one of the objectives, and the other is to protect some of the capital. So how does it actually work? So very, very, very simple, right? So I've got an example here. So let's just say you've got $100. You invest that into a bond, and then that bond, or I guess this investment, pays you. I've got just here 4.5% per annum. So everything sounds like in terms of deposit so far, right? So, and then this is invested over a period of time, and at the end of the term, you get your money back. So you get your $100 back. So if this is over 10 years, so in 10 years, you get your $100 back that you've originally invested 10 years ago. And along the way, you collected 4.5%. So quick question, if you tuned in 2 weeks ago and I spoke about cash, do you remember what happens to the value of your $100 over a period of time? If you do, then the answer would be it does erode, and it does give you less purchasing power over time. So that's a very important factor, right? So when we're protecting capital, we are forgoing a couple of things on the back of it. So very, very simple principle, right? So sounds super simple, very much term deposit. Why would I do it? Well, the thing is, let me just skip this slide. This graph here is just the just a diversified bond fund, and just sort of to show you what sort of returns you'd be looking at over a period of time, especially over the last 5 years. And why I wanted to focus on the 5-year period is because it's super interesting, because we had COVID period when we had interest rates coming down quite rapidly. And then at the same time, 2022, we had interest rates rising quite rapidly as well. So we had a very strong performance in the interest rate sort of market, which then impacts the valuation of your fixed interest. So like I said earlier, term deposit, if you invested over a period of time, it doesn't fluctuate because it's like cash with a bit of interest. The bond does have an ability to fluctuate up and down. But what you have to remember is that at the end of the term, let's just say this is a 5-year term, you will still, so in this example, it's a $10,000 investment. You can see that it's going up, which makes sense because sort of early 2020, that's when COVID hit. So the interest rates were coming down. So the value of your bond was going up. So I'll just come back to this in a sec, but just to let you know, so in the very simple terms, if the interest rates are going up, then the income of your bond is likely to rise. But the capital will suffer, because if you think about it, why would someone want to buy your fixed interest if tomorrow I can get the same amount of fixed interest with a high interest rate? So therefore the valuation falls. And opposite happens when the interest rates fall. The income on that bond or the new bonds reduces. But now I want to buy your bond because I know if I wait another day, I'm going to be earning much less income on my capital. So therefore, the capital rises. So if I come back to this example here, so over sort of 2020 and 2021, the interest rates were coming down quite rapidly. So the valuation of your bond has gone up, and you're thinking, well, hold on, it's fixed interest. How can it do that? Well, that's the difference between the bonds and term deposits. It does have the ability to do that. So, and then in the opposite sort of scenario, when we had 13 interest rate rises in a row, the bond, again, like I said, it started to fall down in value because the interest is much better in a month's time than it is today. So why would I lock away my capital now? So therefore, the value of that bond has fallen down. It has sort of started to come back up, mainly because internationally there's been some movement in interest rates and some reductions. So that is having a positive impact. So, but here in Australia, we haven't seen that yet. Like I said, this is a combination of international and Aussie. So then you might say to me, all right, well, why would I invest into bonds if they can go up and down in value? Well, again, it's all about understanding what role it plays in your portfolio, because you know that 10,000 5 years ago will still give you 10,000 here. This sort of movement up and down is irrelevant to you, because you are guaranteed to receive your capital back. However, what you may do during periods when we have sort of high interest rates or low interest rates, you might think, okay, well, if 2 years ago the interest rates were basically zero, that could have been a really good time to look at fixed interest for an income from an income perspective, right? Because I'd be thinking, the capital perspective, because I'd be thinking and saying, okay, as we know, if the interest rates are going up, my income is going up and capital is coming down, but I'm buying this at a discount. So over time, my capital is going to go up as my income. So it's a very interesting sort of asset class. I don't want to make this super difficult to understand, but ultimately just remember that from a fixed interest perspective, you do have a little bit of fluctuation in capital there. So at the moment, if you look at your portfolios, you might notice that the fixed interest part of your portfolio is doing quite well from an income perspective, but it might not be doing so well from a capital perspective. So you'll have two different columns, one to say, well, what capital has it received over the last 12 months or the last couple of years, and it might be a negative number, but you have to understand why that is. Well, that is because we're kind of coming off low lows here when the interest rates were zero. So, you know, but if you stay the course, then you're going to get your money back. Again, sometimes it's outside of your control because you most likely have a you most likely have a fund manager sitting on top of that. So, and they're doing all the calls. However, you know, that's how they try to make a little bit of an uplift in your return by trading this. So you can trade your bonds throughout the duration as well, which is another sort of powerful tool. So you might have bought something, say 10,000, the interest rates fell, and then, you know, your bond is now worth, say, 10,000 or 11,000, let's just say, for example. In this case, it's 10,000, say $200, right? So all of a sudden, you're making money on something that typically should be a defensive part of your portfolio. So again, you know, there's a couple of more sort of sections in this series around, you know, putting together a portfolio of assets. I guess the main message here again is really to understand what role does it play in your portfolio and how you can utilize that over time, right? So we're not here to time the market or anything like that. It's just about understanding, is this an income producing asset for me? Is this a capital appreciation asset for me, or is it something on both sides, right? So I guess over the next couple of weeks, we'll dive into more aggressive investments, which hopefully you'll be more familiar with. Fixed interest, like I said, I'll come back to this topic in the future and dive deeper into a couple of the scenarios, because I think it's a very important area of your portfolio that you shouldn't ignore. And I always use an analogy. It's like driving a go-kart with no suspension, which is not a comfortable ride, versus driving like a Rolls Royce with an air suspension, right? So you don't really feel any bumps. So you need to have fixed interest in your portfolio to give you that quality in your ride. But, you know, if you're super aggressive, then you need to be able to absorb the bumps along the way. So hopefully this gave you a little bit of an insight into what fixed interest is. Like I said, I'll come back to it in a couple of episodes' time, and we'll dive deeper into it. So don't forget to share your comments. Let me just have a look. Hey Trina, how are you? Good to see you. So it'll be good to get some more insights into what you guys want to hear about, especially from the financial planning side, and I'll be happy to share that with you. So for now, enjoy your morning coffee, and we'll catch you next week. See you later.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6 Star team here at positivementor.com.au.